The strategy is versatile and can be applied to various markets like Forex, crypto, or even gold, you name it. So first things first, let's set up our chart to get the ball running. Today, we'll be working on the 15-minute time frame for the Ethereum chart. For optimal results, we recommend trying it out with Bitcoin, Ethereum, or gold and using either 5 or 15-minute time frames. Now comes the exciting part, adding our first indicator to the mix. It's super simple to set it up. Just head over to the indicator section and in the search bar, type in half trend Heikin-Ashi. This fantastic tool combines the power of the half trend methodology and Heikin-Ashi candles, making it the perfect ally for spotting trends and potential market reversals. Once you hit enter, look for the indicator created by Big Beluga and add it to your chart. At this point, you might be wondering, why are you using the half trend Heikin-Ashi indicator? It's an excellent question, and the answer lies in its ability to analyze the market by taking into account moving averages and the highest and lowest price data value. This powerful combination helps you identify trends, predict potential market reversals, plus it works seamlessly across multiple time frames and provides a cumulative trend score, ensuring that you're always well equipped to handle any market situation. Alright, so now that we have our half-trend Heikin-Ashi indicator set up, it's time to make a few simple adjustments to ensure we're getting the best results from our trading strategy. Don't worry, these changes are quick and easy to implement. Let's start by opening the indicator settings and navigate to the Inputs tab. First, we'll change the amplitude to 3, which will help the indicator better identify market trends and potential trading opportunities. Next, let's enable the Heikin-Ashi option to smooth out the price action and provide a clear visual representation of the market's movements. Moving on, we want to make sure the signal size is set to large, making it easier to spot those important buy and sell signals on the chart. You can also customize the trend color to suit your personal preferences, along with the candle color, giving your chart a unique look that's tailored to your trading style. In the Style section, there's not much to adjust, but feel free to explore the settings and find what works best for you. Now, to ensure the chart displays the color-coded bars provided by the half-trend indicator, we need to make a quick adjustment in the chart settings. So right-click on the chart and select Settings. Then navigate to the Symbol tab and disable all the options, allowing the color candles from the indicator to take center stage. At this point, you might notice that the chart is generating buy and sell signals. While it might be tempting to dive right into trading, it's important to hold off for just a second. Some signals could potentially go against the market trend direction, which is something we want to avoid. But don't fret, we've got a solution for this issue. It's time to introduce the second indicator that will help us make more informed trading decisions, the Moving Average Convergence Divergence or MACD indicator. This popular and versatile indicator provides valuable insights into the market's momentum, direction, and potential trend changes. To add the MACD to the chart, head back to the indicator section again, and this time type in Moving Average Convergence Divergence in the search bar. Once you found it, simply click on it to add it to the chart. Now let's discuss how the MACD works and why it's an essential tool for traders. This indicator consists of two moving averages, a short term and a long term, that work together to help identify trend direction and potential changes in the market momentum. The MACD histogram provides a visual representation of the distance between the MACD line and the signal line, making it easier for traders to spot potential trend changes. Now we're going to make some minor adjustments to the settings to ensure that it serves as the effective confirmation within our strategy. To begin, let's open the MACD settings and navigate to the Inputs tab. We're going to modify the fast and slow moving averages to tailor the indicator to our specific trading strategy. Change the fast moving average to 100 and the slow moving average to 200. By adjusting these settings, we'll have a clear view of the market's momentum and trend direction. Since we won't be using the signal line for this strategy, there's no need to make any changes to the particular setting. However, we do want to make a few minor adjustments in the Style section to enhance the visual aspects of the MACD on our chart. So first, let's change the histogram option to columns. This will provide a more organized and easy to read representation of the MACD data. Next, we'll modify the color scheme to help us better distinguish between positive and negative values. Change color 0 to green, color 1 to white, color 2 to white, and color 3 to red. This color scheme will enable us to quickly identify bullish and bearish momentum by looking at the histogram. Now let's focus on the MACD line and the signal line. Since our primary focus is on the histogram, we can disable the MACD and signal options to declutter our chart and make it easier to analyze the information we need. Lastly, we want to ensure that the zero line is clearly visible on the chart. By increasing the line's thickness or adjusting its color, we can easily identify when the MACD histogram crosses the zero line, signaling a potential shift in the market momentum. The main goal here is to use two powerful indicators, half-trend Heikin-Ashi and MACD, to help us make better decisions when it comes to buying and selling in the market. The MACD shows us green, red, and white columns. The green columns tell us that the market is bullish and that's a good time to consider buying. The red columns, on the other hand, show the market is in a downtrend, so selling might be the way to go. Now, when we see those white columns, it's best to hold off on making any trades for the time being, regardless of where they are relative to the zero line. To give us an idea of how this works in action, let's look at some examples. Suppose we have a buy signal on the chart, but when we check the MACD, it's white. In this case, we should escape the trade, as the market conditions might not be ideal. The same goes for a sell signal when the MACD is still white. It's better to be safe and wait for a more favorable opportunity. Now we see another signal, which is a buy signal. At this time, the MACD column is green. That's our cue to go ahead and open a buy trade at the signal candle's closing price. Just remember to play it smart and set a stop loss slightly below the Heikin-Ashi candles or the recent swing low, so you can protect your investment in case the market doesn't go as expected. When it's come to locking in profits, aim for a risk to reward ratio of 1 to 1.5, which will help you strike a balance between risk and potential gains. And when it comes to selling, the rules are basically the flip side for buying rules we talked about earlier. So instead of looking for a green column in the MACD histogram to confirm a buy signal, you'll want to keep an eye out for those red columns that tell you it might be a good time to sell. Alright, it's time to see how this strategy performs in action. We consider a backtesting experiment with 100 trades on the 15-minute Ethereum chart, and the results are in. You might want to sit down for this because the numbers are pretty amazing. Our backtesting showed that the strategy achieved an incredible 64% win rate. That's well over half of our trades ending up in the green. But that's not all. We managed to score a massive 80% profit on the spot market without using any leverage, all with just 3 weeks. Impressive, right? Now let's talk about the profit factor, which helps us compare our profits to our losses. In this case, we're looking at a robust 2.67 profit factor, showing that our strategy is doing an excellent job of keeping profits high and losses low. During backtesting, we saw a maximum of 5 consecutive wins and only 3 consecutive losses. That's a testament to the strategy's consistency and reliability. Lastly, we need to consider the max drawdown, which represents the biggest drop in our account balance. In this case, the max drawdown was a mere 2.97%, indicating that our risk management techniques are working effectively in protecting our capital from significant downturns.